Okay, here we are on the 6E, and I am seeing an archer arch here, one of our standard signals. We're going to go ahead, and here's our neckline right here. We're going to go ahead and go short here, 6 contracts. This is a point and click. This is Ninja Trader, one of our partners. And we got our fill. Our average fill on the 6E is 1.1157 is our average entry on 6 contracts. We have our profit target at 1.1147 and 1.1167 is our stop. That's the red bar at the top. They automatically set up for you. So we'll go ahead and sit in this trade here. Here's the setup here. We get these. The software generates these arrows, but here's the setup right here. Price comes down, comes up, and bounces off. It was a great entry, and now we just sit and wait for this thing to do what it's going to do. Now we have moderators setting these trades up in the trading room, and help you execute your trades here. Alright, this trade looks like it is not going in our direction, but we have our stop set in. And if we do get stopped out of this trade, and we might not, but if we do, we have a second trade. It's called a second entry. Very high probability. Looks like, okay, we got stopped out here, so we ate $750 on that. Here's the trade. There was the breakout. But we're looking for a second entry. We may or may not get it. So let's keep our eyes open. Let's lick our wounds and move forward. Okay, we're getting our second entry right here. Let me put in our order here for 10 contracts short. This is called a second entry archer arch. Very high probability. We haven't been picked up. There, we're picked up. 10 contracts short. Our average fill is 1.1165. The way the software works, you have to understand how the orders are put in. This is human interest or trader interest at certain price levels. That's how these arrows are generated. Now, if a trade goes against you and you get stopped out, the interest is still at that level. It's like a big boat trying to turn around in the river, so to speak, or in the ocean. It takes a wide berth. Sometimes it doesn't. A small boat takes a shorter berth. This wide berth is many times is what we're looking at right here. So we take the second entry on the same arrow, and that's what we did right here. So it's a very high probability trade while we went 10 contracts. Okay. Here we are. We're going to go in another 5 contracts short. This trade is definitely taken off the way we intended it to on the first trade, and it's definitely hitting where we need it to hit right here on this trade. So very high probability. Let me get 5 contracts here, and we'll go ahead and bang this in. All right, there we go, and point and click. There it is. All right, we're good. We are in 15 short right now. Let's go ahead and just take it right here, and we'll should be in the green right here. We'll move in our stop to break even. Oh, there it is. So we hit our profit target right there. We're up 500. We dissolved the $750 loss with this win, which puts us up at even 500. So that's how that's done. So those were 2 good trades. The first trade was a good trade. We lost money on it, but if I saw that same trade, we would take it the exact same way. But you have to be ready for that second entry, and that's what we did, and it paid. And all right. Well, anyway, y'all have a great weekend.